How to invest in real estate through REITs. Have you ever dreamt of owning real estate but thought it was out of reach? Maybe you've heard the term REIT thrown around, but had no idea what it actually means or how it could make you rich. Imagine owning a piece of the most lucrative real estate across the country, all without dealing with tenants, maintenance, or even a down payment. Sounds too good to be true? Stick with me, because by the end of this video, you'll know exactly how to invest in real estate investment trusts, REITs, and yes, you can start today with as little as $50. 1. Setting the scene, understanding REITs. Let's break it down. Real estate investment trusts, or REITs, are companies that own, operate, or finance income-producing real estate. In simpler terms, it's a way to invest in real estate without buying physical property yourself. You're essentially buying shares in a company that owns things like office buildings, apartments, malls, and even healthcare facilities. And guess what? As these properties make money, whether it's from rent or capital appreciation, you get a cut of the profits. This is called a dividend. Yes, it's that easy to start getting cash flow from real estate. Now, here's the thing. We all know that real estate can build wealth quickly, but traditional property investment requires serious capital, money that most of us don't have when we're just starting out. With REITs, you can get started with minimal risk and without needing a fortune. In fact, many investors are building their portfolios with as little as $500 or less. Yeah, you heard that right. But why are so many people still not jumping on this train? Keep watching, because it gets even better from here. In just a few minutes, I'll show you exactly how to make the first move. 2. The power of REITs. Now that you understand what REITs are, let's talk about why they're so powerful, and why, if you don't start investing in them now, you might miss out. Are you ready for this? REITs allow you to access the real estate market without the headaches. Picture this. You could be collecting rental income while sipping coffee in your favorite cafe, or even lounging on a beach. Seriously, REITs let you diversify your investments across multiple properties, industries, and even geographical locations. This means you can spread out your risk like a pro. But here's the kicker. REITs are required by law to pay out at least 90% of their taxable income in the form of dividends. So, not only can you potentially see growth in the value of your shares, but you're also receiving consistent cash flow. Cha-ching. For example, let's say you invest in a shopping mall REIT. Every time someone rents a retail space, you get a piece of the rent. Pretty cool, right? But I want to make sure you're not just riding the wave. Because the truth is, some REITs can also be risky. But don't worry, I'm about to show you how to make sure you're investing wisely, with zero regrets. Quick question for you. How many times have you looked at your bank account feeling like it's never enough? Be honest. Well, investing in REITs might just be the first step in changing that story. And you don't need to be a millionaire to start, which is pretty much the dream, right? 3. The how-to, getting started with REITs. So, you're probably asking, how do I actually invest in REITs? It's easier than you think. Here's your roadmap to get started. Step 1. Research the market. You need to know the basics of different types of REITs. Are you interested in office buildings, retail, healthcare, or maybe even residential properties? You can choose from a variety of REITs that cater to different sectors. Step 2. Choose your platform. You can invest in REITs directly through major stock exchanges, like the New York Stock Exchange or NASDAQ, or use brokerage apps like Robinhood, E-Trade, or Charles Schwab. These platforms are incredibly user-friendly and let you buy shares for a fraction of the cost of actual property investment. Most of them also have no account minimums, so you don't need a fortune to get started. Step 3. Make your first investment. This is where the magic happens. You can buy shares of a REIT just like you would with stocks. Once you've picked one that aligns with your goals, go ahead and purchase some shares. Many platforms even let you start with as little as $50. It's that simple. But don't just take my word for it. Do the research, start small, and start building your portfolio for the future. And here's where I want you to really pay attention. The earlier you start, the more time you have to compound your returns. This is crucial for building wealth over time, because you don't want to wake up 10 years from now and wish you'd started earlier. Trust me, you'll thank yourself for it. Now, I know you're probably wondering, what's the catch? Are there risks involved? How do you know you're choosing the best REIT for your portfolio? Don't worry, because in the next part of this video, I'm going to reveal exactly how to avoid the common mistakes that rookie investors make. You don't want to miss it. Stay tuned. So, what are you waiting for? If you want to secure your financial future and get involved in the real estate market without breaking the bank, now's the time to take action. Hit that like button, subscribe for more wealth-building tips, and drop a comment below telling me your thoughts. Are you ready to take that first step? I know you can do it, because the smartest investors know that the best time to start is always right now. Let's do this! Thanks for watching, and I'll see you in the next video.